Hello and welcome to Buy Stake Chill Your Home for the clearest, most honest Bittensor content on the internet. Today we're telling a story that just went public, and it could be the biggest moment in Bittensor history since the white paper. Two builders who've already made millions in crypto looked at the ecosystem and saw something most people still miss. They saw Bittensor in 2026 as the pre-IPO Google of AI, or Bitcoin before its first halving, and they decided to do something about it. They're raising $100 million of fresh institutional capital, not to extract value, but to inject it straight into the network. They call it SubnetAlpha, SN127. It's not a fund, it's not a company, it's an on-chain movement designed to make every subnet, every miner, every staker win together. Here's how the three engines work. Engine 1, the on-chain investment vehicle. Permissionless, transparent, smart contract-driven. Institutions pledge TAO. Every dollar flows directly to vetted subnet teams. No middlemen, no secret deals. They've already secured 18,000 TAO in institutional interest. That's over $6 million at current prices. Now let's dive into Engine 2, the competition arena. This is where the rubber meets the road, where abstract intelligence is forged into tangible results. We've built a relentless 24/7 crucible for performance. Inside this digital coliseum, our AI trading agents are pitted against a formidable adversary, real, professional human traders serving as the ultimate performance benchmark. This isn't a simulation, it's a live battle executed on-chain, with every single trade, every win, and every loss recorded immutably for the world to see. The challenge is simple, but brutal. Outperform the human, day in, day out. The AI must constantly adapt, learn, and evolve, because the benchmark is a moving target, a testament to human intuition and expertise. This constant pressure ensures only the most effective, most intelligent agents survive and thrive. It's a meritocracy in its purest form, where code is judged by one thing and one thing only: its ability to generate profit. But what happens to those profits? This is where our model fundamentally breaks from the past. In the old world, those profits would be siphoned off by venture capitalists, creating sell pressure as they dump their tokens on the market. We've engineered a completely different system. Here, 100% of the profits are used for a single, powerful purpose: to buy back and burn the subnet's native alpha tokens. This isn't a one-off event. It's a continuous, automated process. Every profitable trade fuels the fire, systematically removing tokens from the circulating supply forever. This creates a permanent liquidity sink, a deflationary vortex that counters inflation and ensures value is locked within the ecosystem. There is no mechanism for VCs to dump on you. There is only a constant, algorithmically driven force creating sustained upward pressure on the token's value. Think of it as a specialized version of Ridges, but for high-frequency trading algorithms. It's a flywheel of value creation. The agents compete to beat human performance. Their success generates profits. Those profits are then reinvested directly back into the health of the ecosystem through the burn mechanism. This makes the network's token more valuable, which in turn attracts more sophisticated developers and more advanced AI agents to compete. This virtuous cycle is the core of Engine 2, a self-sustaining, self-improving economic model designed for long-term growth and value, accrual for every token holder. Engine 3, the Digital Treasury. This isn't just a passive vault, it's an active, intelligent economic engine designed to be the financial backbone of the entire subnet ecosystem. Its primary mission is to identify and accumulate vast quantities of early alpha tokens from the most promising new projects, the potential unicorns of tomorrow. By acting as a first mover and strategic capital allocator, the Treasury positions itself to capture immense upside from the network's most groundbreaking innovations before they hit the mainstream. It systematically becomes the single largest, most influential holder of these nascent assets. But it doesn't just hold them, it locks them up for years. This long-term lockup is a critical mechanism that demonstrates profound conviction in the projects it backs. It aligns the Treasury's incentives directly with the long-term success of the builders, fostering stability and preventing premature sell-offs that could destabilize a young project's tokenomics. This patient capital strategy ensures that value is nurtured and compounded over time, creating a powerful, ever-growing foundation for the entire ecosystem. After this vesting period, the Treasury transforms these locked assets into the ultimate exit liquidity for builders who deliver real, verifiable value. It's the reward at the end of the road. To ensure fairness and protect the Treasury's capital, a dynamic discount system, governed by DTAO metrics, is employed. This system acts as a sophisticated quality filter. High-performing projects with strong metrics can swap their tokens for TAO at or near market value. Conversely, low-quality alphas, identified by poor performance data, face a steep discount of 50% or more. This powerful economic lever disincentivizes bad actors and ensures that only genuine value creation is rewarded, safeguarding the integrity and capital of the Treasury for the next generation of innovators. The flywheel is simple but unstoppable. Fresh capital, stronger subnets, higher emissions, stronger TAO, even more fresh capital. They're not hiding behind avatars, they're showing their faces, flying to meet the community, recording every step, every raise, every decision, because they believe Bittensor is the most important technology since the internet itself. And they want the entire ecosystem to capture that value, together. With the halving in 19 days cutting new TAO supply in half, this capital injection couldn't be better timed. This isn't just a fund, this is a movement. But it's not without challenges. The biggest might be political. Bittensor's governance is young, with early actors holding outsized influence. Sudden rule changes could impact any subnet, including this one. They're building in good faith, openly, hoping the network evolves to stay permissionless for everyone. So, who is the powerhouse team driving this vision forward? We're talking about seasoned builders, the architects behind DSV Fund, who have a proven track record of raising millions and deploying capital effectively within the digital asset space. Now they're channeling that expertise and momentum into their next major initiative, a massive $5.5 million expansion specifically for Astrid. This isn't just a number, it's a statement of intent, a war chest designed to attract and fund the most promising revenue-generating projects on the Bittensor network. The team, led by the relentless duo of Siam Kidd and Mark Creaser, isn't just writing checks from an ivory tower. They are deeply embedded in the ecosystem, operating with a hands-on, sleeves-rolled-up mentality that sets them apart. Their commitment is demonstrated through tangible, consistent action. They actively host the Revenue Search podcast, which has already clocked 48 episodes, creating a public forum for discovering and vetting new talent. They're on the ground, organizing community brunches across France and the UK, fostering direct relationships, and building a grassroots movement. And crucially, they are relentlessly TAO-pilling investors, systematically educating traditional capital allocators on the paradigm-shifting potential of the Bittensor network. This isn't just about hype. It's about building a durable bridge between decentralized innovation and institutional-grade investment, ensuring a sustainable flow of capital into the ecosystem. Their model is built on a foundation of radical transparency and alignment, which brings us to the most critical point. The team holds absolutely no pre-mined ownership in the subnet or its vault. Let that sink in. They are not founders enriching themselves with a massive initial allocation. Instead, they are employed professionals, compensated with 3-year share options in their London-listed, public limited company. This structure is a game changer. It means their incentives are perfectly aligned with long-term value creation, not short-term token pumps. They have to earn their success over time, just like any other stakeholder. Furthermore, this forces them to participate in their own ecosystem on equal footing with everyone else. They have to go to the open market and buy their own alpha, subjecting themselves to the same market forces as every other user and investor. This is the ultimate proof of skin in the game, a model of fairness and decentralization that builds unshakable trust. Roadmap is aggressive. Light paper refining with feedback from ecosystem OGs like Rizzo, Alla, Vune, Gavin Zentz, Mog, Etienne, and Const, deploying TAO into subnets ASAP. This is the moment decentralized AI gets the fuel it needs to go from underground gem to global standard. SubnetAlpha just showed us the blueprint. Not a financial advice, please do your own research. Special thanks to the builders pushing this vision forward: DSV Fund, Siam Kidd, Mark Creaser, and Digital Alpha Treasuries. DAT. Your work for the TAO family doesn't go unnoticed. Strength to you. Long live TAO. Long live Bittensor. Thanks for learning with us. Please like, share, and subscribe to Buy Stake Chill. We bring you the real alpha. Cheers.